Welcome back to We Are Cosmic, everyone. I hope you're having a fantastic day wherever you are in the world. Tonight, I want to talk about something huge that just happened in the crypto world, a development that could change how the United States positions itself as a global crypto leader. Yes, I'm talking about President Donald J. Trump's latest statements regarding the Clarity Act and the ongoing tension between banks and the crypto industry. Now, I wasn't planning to make another video today, but what's happening right now is too important to ignore. The crypto space is moving fast, and the actions of both politicians and financial institutions are shaping the future of this industry. So, if you're serious about staying informed and want to understand what's really happening behind the headlines, stick around and type an X in the comments to let me know you're following along. To start, let's break down what President Trump just said. Earlier today, he made it very clear that he's unhappy with the banks trying to undermine the progress of the Clarity Act. This is significant because the Clarity Act is meant to give structure to the U.S. crypto market, regulate stablecoins, and prevent banks from having too much control over a rapidly growing digital asset space. Trump's message was loud and direct. We are not going to allow banks to sabotage our powerful crypto agenda. He also warned that if these banks continue to slow down the process, the crypto industry might migrate to other countries like China. Think about that for a second. We're talking about the possibility that some of the biggest innovations and opportunities in crypto could leave the U.S. entirely if the government doesn't act decisively. Earlier reports, including insights from Eleanor Tarrant at the Milken Institute, suggested that some industry insiders thought Trump would remain neutral on the battle between banks and crypto. Many executives believed he would fundraise from both sides before taking a clear stance. But these assumptions turned out to be wrong. The president is now actively putting pressure on banks, signaling that the U.S. must complete its market structure reforms quickly. His comments emphasize a fundamental principle. Americans should be able to earn more from their money, and banks should not be allowed to block progress for their own gains. After all, banks are already reporting record profits while the crypto industry continues to grow with immense potential. As someone who follows crypto every day, I can tell you that this news matters. It's not just political noise. It impacts how the U.S. could become the leading hub for digital assets. Brad Garlinghouse, the CEO of Ripple, responded strongly, backing Trump's stance and reminding the industry that what's happening is ultimately in the best interest of the American people. Garlinghouse highlighted the need for the Clarity Act to pass so that digital asset markets in the U.S. can operate under a secure, future-proof structure. The message is clear. Delays are unacceptable, and the time to act is now. Even officials like the CFTC chairman and members of the House Financial Services Committee are echoing this urgency. They see the Clarity Act as essential for implementing a market structure that protects investors and keeps innovation within the U.S. This coordinated push from both the executive branch and industry leaders shows that the Clarity Act is not just legislation, it's a strategic step to secure the country's position in the global crypto economy. For regular crypto investors and enthusiasts, this is a moment to pay attention. We are witnessing the convergence of policy, finance, and technology in real time. What happens over the next few months could determine whether the U.S. maintains leadership in digital finance or risks losing ground to countries that are faster at embracing innovation. And for those of you who are actively investing in crypto, understanding these developments is just as critical as reading price charts. It's about knowing how policy impacts the market you're part of and positioning yourself wisely. So if you've been following the Clarity Act and the crypto market closely, you know that patience has been tested, deadlines have passed, frustrations have grown, and now pressure is finally being applied at the highest level. This is the type of real-time update that can affect decisions for retail investors, institutions, and innovators alike. In upcoming parts of this series, we'll break down the specific statements, reactions from key figures, and what this means for Ripple, XRP, and the broader crypto landscape. For now, consider this your primer on why staying informed about policy and leadership decisions is just as important as tracking market trends. As we move forward, it's important to understand the reactions coming from across the crypto industry regarding President Trump's statements on the Clarity Act. The tension between banks and crypto innovators has been escalating for months, but this is one of the clearest interventions from a U.S. president in support of the industry. Many of you following the news closely know that banks have been resisting some of the provisions of the Clarity Act, particularly those related to stablecoins and yield regulations. Their concern is largely about control and profit. Banks see stablecoins as both a competitor and a threat because they could bypass traditional financial systems and reduce the fees and leverage banks usually enjoy. But what's happening now is a very public pushback against this resistance, and it's significant because it signals that crypto isn't just being tolerated, it's being championed at the highest level. Brad Garlinghouse, the CEO of Ripple, has been extremely vocal about this. He made it clear that the delay in the Clarity Act is hurting innovation and the future growth of digital assets in the United States. His messages emphasize that this legislation is not just about regulation, it's about building a framework that allows American companies to compete globally. Ripple itself is a major player in this space, and Garlinghouse's comments highlight the stakes. If the Clarity Act doesn't pass, the U.S. risks losing leadership in crypto to other countries like China, which are aggressively fostering digital asset development. This is not just theory. It's a real possibility that could impact investments, innovation, and even the global adoption of U.S.-based crypto infrastructure. The frustration in the industry isn't limited to executives. Many everyday crypto investors have been vocal about the delays and uncertainties surrounding the Clarity Act. People are eager for clear rules that allow them to participate safely and confidently in digital markets. Until the legislation is passed, there's always a risk of misinterpretation, regulatory loopholes, or enforcement inconsistencies, which could create instability or even scare away new investors. By stepping in, President Trump is sending a signal that he wants to protect this growing market, keep it in the U.S., and ensure it benefits everyday Americans, not just large banks. Meanwhile, other political figures are adding pressure from different angles. The chairman of the Commodity Futures Trading Commission, CFTC, and members of the House Financial Services Committee, including French Hill, have been urging the Senate to adopt the House version of the Clarity Act. They emphasize that it's critical to resolve stablecoin yield disputes and establish a future-proof digital asset framework. The consensus among these officials is clear: time is of the essence. Delays are not just inconvenient. They threaten the U.S.'s ability to lead in global crypto innovation. And in the world of technology and finance, being late can mean losing ground permanently. For investors and enthusiasts, these developments underline an important truth. Crypto is no longer just a fringe financial experiment. It's becoming an integral part of the global financial system, and policy decisions directly influence the value, adoption, and innovation in this space. Ripple's XRP, for example, benefits from a clear legal and regulatory framework because it relies on cross-border transactions, partnerships with banks, and institutional adoption. Without regulatory clarity, companies like Ripple face uncertainty, which can slow growth and innovation. But with strong legislation and government support, the U.S. can maintain its competitive edge and foster an environment where both investors and companies thrive. Finally, it's worth noting the wider impact of these actions. When the U.S. shows leadership in crypto legislation, it sets a global standard. Other countries often watch U.S. regulations and may follow suit, adopting similar frameworks to attract business or protect investors. This is why the Clarity Act isn't just a local issue, it has international consequences. The decisions made today could shape the next decade of crypto adoption, market expansion, and financial innovation. Understanding this helps investors, developers, and everyday participants see why this moment is critical and why staying informed isn't optional. It's essential for anyone serious about crypto. Now that we've covered the industry reactions, let's dive deeper into what President Trump actually said and why it matters for the crypto market. Trump's statements were more than just political commentary. They were a direct challenge to traditional banks that have been slowing down the Clarity Act. He highlighted a very clear point. Banks are hitting record profits while simultaneously undermining a growing industry that has the potential to benefit millions of Americans. By framing it this way, Trump positioned the Clarity Act as not just legislation for crypto companies, but as a tool to ensure fair opportunities for ordinary investors. This is important because it signals that the government is taking the side of innovation and growth rather than letting entrenched financial institutions block progress for their own gains. One of the key points Trump made was the warning that the crypto industry could leave the U.S. if banks continue to resist. This is not hyperbole. Countries like China are already moving aggressively to attract crypto projects, stablecoins, and blockchain innovation. If U.S. policies stall or fail to create a clear market structure, companies and investors might look for friendlier environments overseas. That's why the Clarity Act isn't just a bill on paper. It's a strategic tool to maintain America's leadership in crypto. Every delay or compromise could mean that innovation, jobs, and investment capital migrate elsewhere. Trump's push, therefore, is a signal to both banks and the broader financial industry. Act responsibly or risk losing out to global competitors. The bank's challenges with the Clarity Act are mostly about control. Traditional banks profit from systems they dominate and may feel threatened by decentralized technologies and stablecoins that bypass traditional payment channels. They argue that strict regulations are necessary to prevent risk, fraud, and market instability. However, the crypto industry sees these delays as unnecessary roadblocks designed to protect outdated financial models rather than consumers. Ripple, for example, has been advocating for a balanced approach where regulations provide clarity but also allow innovation to flourish. Brad Garlinghouse's comments make this very clear. Progress cannot wait, and America cannot afford to let bureaucracy and banking resistance slow the rise of digital finance. From a market perspective, these tensions have real effects. Whenever there's uncertainty around legislation, investors react by holding back or moving capital to safer or more predictable markets. Price volatility in coins like XRP can spike not just from market speculation, but from regulatory ambiguity. That's why clarity is so critical. When the Clarity Act passes, it will create a transparent framework that reduces risk, increases institutional adoption, and ultimately strengthens the market's credibility. Investors, from retail to institutional, will have more confidence that their assets are secure and their activities compliant. This is a fundamental step in transforming crypto from a speculative market to a mature financial ecosystem. Additionally, Trump's public stance increases pressure on lawmakers and regulators to act quickly. Statements from the CFTC chairman and the House Financial Services Committee show alignment with the president's urgency. They emphasize that the U.S. must finalize a future-proof market structure, resolve stablecoin yield disputes, and create a framework that encourages innovation while protecting consumers. This coordination between the executive branch, regulators, and industry leaders is unprecedented in the crypto space. It shows that the government is not ignoring the potential of this sector and recognizes the economic and strategic importance of keeping crypto development domestic. Finally, this moment is a reminder for all crypto participants that policy and regulation are not separate from market action. They are deeply interconnected. Understanding political developments, statements from influential leaders, and legislative timelines is just as crucial as technical analysis or price trends. When the U.S. moves decisively, it creates opportunities for growth, innovation, and long-term market stability. Conversely, delays or missteps can amplify risk, reduce adoption, and slow technological advancement. For investors, companies, and enthusiasts alike, paying attention to these dynamics is not optional. It's essential for making informed decisions and positioning oneself for the next phase of the crypto evolution. Now that we understand the political context and industry reactions, it's time to focus on the Clarity Act itself and why it matters so much for Ripple, XRP, and the entire crypto ecosystem. The Clarity Act is designed to create a clear legal and regulatory framework for digital assets in the United States. Its main goal is to resolve uncertainty around stablecoins, yield generation, and the roles of banks versus decentralized platforms. Right now, one of the biggest challenges in crypto is regulatory ambiguity. Investors, companies, and even financial institutions often operate without knowing exactly what rules apply. The Clarity Act aims to fix that, making the U.S. market safer and more predictable while encouraging innovation rather than stifling it. For Ripple, the Clarity Act could be a game changer. XRP is widely used for cross-border payments and liquidity solutions, which depend heavily on partnerships with banks and financial institutions. Without clear regulations, banks might hesitate to adopt Ripple's technology fully, fearing legal complications or enforcement action. Once the Clarity Act is in place, it will create a clear path for these partnerships, allowing Ripple to scale operations in the U.S. and strengthen its global network. Essentially, the legislation could unlock broader adoption, making XRP more valuable not just as a speculative asset, but as a practical utility for real-world finance. Stablecoin regulation is another critical component of the Clarity Act. Many in the crypto industry have been frustrated by inconsistent guidance on stablecoins, digital currencies pegged to traditional money like the US dollar. Banks have pushed for strict rules that could slow innovation, while crypto advocates argue that overregulation could push projects overseas. The Clarity Act is expected to strike a balance, giving projects a framework to operate safely while protecting investors. This is where Trump's statements become particularly relevant. By publicly warning banks not to hold the Clarity Act hostage, he is signaling that the U.S. government wants innovation to thrive domestically rather than leaving the door open for competitors abroad. The act also has provisions to clarify yield generation on digital assets, which has been a sticking point between banks and crypto companies. Yield generation, earning interest or returns on digital assets, is one of the main ways investors interact with crypto beyond trading. Banks fear losing control of financial flows, while crypto platforms want to offer competitive products. The Clarity Act would establish standardized rules for these yields, giving investors confidence that they can earn returns legally and safely. For retail investors and institutional participants alike, this reduces risk and uncertainty, which in turn encourages greater investment and adoption of digital assets. From a market perspective, passing the Clarity Act could have immediate positive effects on confidence and liquidity. Regulatory clarity typically reduces fear, uncertainty, and doubt, the classic FUD that drives market volatility. XRP and other crypto assets could see smoother adoption in U.S. financial systems, while investors gain clarity on which practices are compliant. In addition, a clear regulatory framework helps U.S.-based companies compete internationally, preventing brain drain and capital flight to countries with friendlier laws. The broader message is that clarity is not just about rules, it's about creating a stable foundation for the growth of an entire industry. Finally, for anyone involved in crypto, this legislation underscores the importance of being aware of policy developments. Investing in Ripple or XRP is no longer only about reading charts or tracking supply and demand. It's about understanding how regulation, government support, and market structure influence adoption, partnerships, and ultimately the value of digital assets. The Clarity Act represents more than compliance. It represents the potential for the U.S. to solidify its role as a global leader in crypto innovation. And for investors, understanding this connection can help make smarter long-term decisions rather than reacting to short-term price movements. As we look beyond Ripple and XRP, the Clarity Act and the current push from President Trump have wider implications for the entire crypto market. Regulatory clarity in the U.S. doesn't just help one project or company, it creates confidence across the industry. Investors, both retail and institutional, are much more likely to commit capital when they know the rules are clear and enforced fairly. For years, one of the biggest hurdles for crypto adoption has been uncertainty. Companies have been cautious, banks have been hesitant, and investors have sometimes stayed on the sidelines, waiting for guidance. The Clarity Act could remove much of that uncertainty, opening the door for increased innovation, adoption, and participation across the board. One of the most significant effects of clear regulation is on institutional investment. Hedge funds, venture capital firms, and even traditional financial institutions have been watching the U.S. crypto space carefully. They want assurances that their investments will be protected by law and that they won't face legal risks for operating within the market. When the Clarity Act passes, it essentially gives a green light to these larger players, allowing them to deploy more capital, explore partnerships, and develop products that leverage crypto technologies. Ripple and XRP are well positioned to benefit because their utility in cross-border payments and liquidity solutions becomes easier to scale under a clear legal framework. For individual investors, the Clarity Act also creates opportunities. Stablecoins, for example, will have clearly defined rules around their issuance, use, and yield generation. That means you can earn interest on your holdings or participate in digital asset lending programs with more confidence that these activities are legal and regulated. It's no longer a gray area where one mistake could lead to penalties. By providing structure, the legislation empowers everyday investors to interact with crypto in ways that were previously risky or confusing. And for those who are actively following projects like XRP, this clarity could lead to higher adoption, stronger partnerships, and potential growth in value over the long term. Another important factor is the competitive advantage this gives the U.S. on the global stage. Countries like China are aggressively building their own digital economies and attracting crypto projects to establish dominance. If the U.S. hesitates or delays, it risks losing talent, innovation, and investment to these global competitors. On the other hand, moving decisively with the Clarity Act signals to the world that the United States is serious about leading in digital finance. For investors, this geopolitical and economic dimension is critical. Being aware of where the U.S. stands in comparison to other nations helps anticipate market movements and the flow of global capital. We also have to consider the behavioral impact on the market itself. Once investors and institutions feel secure, there's likely to be a positive feedback loop. More adoption leads to more liquidity, which encourages more participation, which in turn strengthens the entire ecosystem. Projects like Ripple, which already have a strong track record and real-world use cases, are likely to benefit the most because they can expand partnerships, increase transaction volumes, and enhance utility. At the same time, newer projects that follow regulatory guidelines will have a clear path to grow without legal uncertainty, creating a healthier and more sustainable market overall. Lastly, for anyone participating in crypto, this is a reminder of the importance of being informed. Market movements are not just driven by supply, demand, or speculation. They are influenced heavily by policy decisions, regulatory clarity, and government actions. By staying updated on developments like the Clarity Act, investors can make smarter decisions, reduce risk, and take advantage of opportunities that others may overlook. Whether you're trading XRP, investing in stablecoins, or looking at broader crypto opportunities, understanding the regulatory environment is just as important as understanding the technology. In short, clarity is confidence, and confidence is what fuels growth in this market. As we wrap up this series, it's important to step back and look at the bigger picture of what's happening in the crypto world right now. The Clarity Act, combined with President Trump's statements and industry reactions, represents a pivotal moment for digital assets in the United States. For years, crypto has faced uncertainty, regulatory gray areas, slow government action, and resistance from traditional banks. Now we are seeing a strong push to change that. Trump's clear stance is signaling that the U.S. wants to maintain leadership in crypto, protect innovation, and prevent financial power from being concentrated solely in the hands of large banks. This is a win for the industry and for everyday investors who want access to growth opportunities in digital finance. For Ripple and XRP specifically, this is a critical opportunity. Ripple's technology relies on banks and financial institutions to enable fast, low-cost cross-border payments. Uncertainty in the regulatory framework has been a hurdle, slowing adoption and partnership growth. With the Clarity Act moving forward, Ripple can operate with confidence, scaling its solutions and expanding its reach. Investors in XRP should pay attention to this because clear regulations often lead to higher institutional adoption, greater transaction volumes, and ultimately stronger utility and potential value. This is not a guarantee of short-term price jumps, but it sets the stage for long-term growth in a regulated and stable environment. The broader crypto market also stands to benefit from these developments. Regulatory clarity reduces fear, uncertainty, and doubt, the very factors that have caused volatility and hesitancy in the past. Stablecoins will have clear guidelines, yield generation will be standardized, and new projects can enter the market with confidence. Institutional investors, from hedge funds to traditional banks, are more likely to participate when rules are transparent and consistent. That means more liquidity, more partnerships, and more innovation across the industry. In other words, clarity doesn't just benefit one company, it benefits the entire ecosystem. As investors, there are a few actionable takeaways from all of this. First, stay informed. Policy and regulation are just as important as market trends. Know what legislation like the Clarity Act means for the assets you hold. Second, consider the long-term impact. Short-term price movements are important, but understanding how regulation affects adoption, partnerships, and market growth can give you a real advantage. Third, explore opportunities to optimize your investments. For example, tax-advantaged accounts like crypto Roth IRAs can help protect profits when the market eventually moves upward. Platforms that provide secure custody and compliance-friendly investment options can be a smart choice for both retail and institutional investors. Finally, remember that the crypto market is no longer just about speculation. It's becoming an essential part of global finance with real-world use cases, institutional adoption, and geopolitical significance. The U.S. has a chance to lead, and how the Clarity Act unfolds will influence that trajectory. For those of us watching and participating in this space, it's critical to understand both the technology and the policy landscape. This dual awareness allows you to make smarter, more informed decisions and positions you to benefit from the next phase of growth in the crypto ecosystem.